This truly feels like a pivotal moment in the intersection of the internet and Wall Street, marking the beginning of a unique and healthy tension that has been building for years, if not decades. The fact that Wall Street has blinked for the first time in the face of this dynamic is something historic, and we are witnessing it unfold. The inauguration of Bitcoin ETFs has unleashed a flood of money, creating an unprecedented scenario on their very first day of listing. The anticipation of chaos looms large as 13 sales forces scramble to attract investments, with industry behemoth Grayscale experiencing massive redemptions. The scheduled creations and redemptions are expected to add an extra layer of complexity, contributing to what can only be described as a chaotic situation. In terms of trading volume, the spot Bitcoin ETFs have shattered records, reaching an impressive $2.38 billion on day one. Now, let's delve into the intriguing realm of pricing predictions. The base case is a formidable $600,000 per Bitcoin, but what's even more intriguing is the bull case, which sees a potential surge to a staggering $1.5 million by 2030. The recent SEC approval is perceived as a green light, enhancing the probability of the bull case materializing. As we analyze the performance of the 11 newly trading Bitcoin ETFs, Grayscale emerges as the leader with over $1 billion in volume, followed closely by BlackRock with $600 million. The competition is fierce, and distinguishing factors become crucial. In the long run, there might not be a singular winner, but rather 2 or 3 successful ETFs. Drawing on experiences in Canada, Germany, and Brazil, it's emphasized that not all ETFs are created equal, with considerations like execution, liquidity, and hidden fees playing pivotal roles. Looking ahead, a fierce competition is anticipated among Bitcoin ETF issuers to capture their share of the market. Advertising strategies, possibly on platforms like CNBC and in publications like the Wall Street Journal, are predicted to become more prevalent. Invesco's proactive approach, exemplified by a call with 90 salespeople, hints at the industry's eagerness to attract customers and highlights the essence of adoption in the realm of Bitcoin. Despite winners still being in the process of being chosen, the first hour of trading has already broken records for the combined volumes of the 10 fresh spot Bitcoin ETFs. Now, interestingly, these new entrants have surpassed the trading volumes of Bitcoin futures, indicating a significant shift in market dynamics. Grayscale remains a dominant player. The influx of fresh ETFs has disrupted the status quo, reshaping the landscape of cryptocurrency investments. Now, as we witness this historic juncture, the narrative of Bitcoin adoption takes center stage, the battle for customer attention becoming increasingly intense. Now, why do we think there will be a wave of redemptions at Grayscale? Well, it's like this. A lot of folks snagged Grayscale at a sweet 30%, 40%, even a 50% discount to the net asset value or NAV. With Bitcoin playing the market at a lower price, the opportunity to cash out at par is just too tempting to resist. It's a chance to book profits and ride the wave of appreciation that's been building up. Let's dive into the ongoing fee battle among these ETFs. Who's offering the cheapest deal? It's a real fee frenzy out there. The question lingering is, will anyone actually make a profit out of this? Sure, there's a colossal demand, but there's also a swarm of players vying to meet the demand. Grayscale dropped from 2% to 1.5% in fees. Now you might be wondering why they didn't go all the way down to 0.2%. Well, here's the kicker. If you want to ditch your Grayscale and hop onto another ship, brace yourself for taxes. Unless, of course, you're in a tax-advantaged account. So, a lot of assets are likely to stay put in Grayscale. Hats off to those guys though. They've been instrumental in pushing this issue forward, even if they don't get enough credit for it. The battle cry seems to be, hold on to what we have from Grayscale, while everyone else is chanting, we want all the shiny new assets. Thus, the fee war rages on. Now, does 2% or 3.4% or whatever percentage really matter? Well, some advisors are sweating the details, while others just want to grab something solid that'll track the price correctly. Now, our crystal ball tells us that tens of billions of dollars will flow into these ETFs. It's a finite asset, so prices will likely climb in the long term. But here's the twist. Is today the perfect time to cash in? Here's what you might be missing. This is a limited supply asset, and there's a legion of believers treating it like a religious artifact. So, 70% of them are not even thinking about selling. Now, where does the supply come from? That is the million-dollar question. This shortage of supply, coupled with a religious fervor among believers, might just drive prices through the roof as adoption grows. Now, short-term musings. Picture this: a bunch of folks who hopped on the Bitcoin train in the last 3 to 4 months, eagerly awaiting this day. Do they hit the sell button? Today could be a roller coaster with potential trades ranging from 50,000 to 40,000. Traditionally, ETFs mark a short-term high on the day of listing, then comes the sell-off, followed by a rally. So, buckle up for some wild price swings in these initial weeks. It's going to be a crypto carnival out there. Now, when we look at our Bitcoin holdings, the thought of selling crosses our minds sometimes. I mean, hitting that $46,000 mark doesn't sound too shabby, right? Now, sure, there are stories of people selling off Amazon stocks or other great investments over the years, but Bitcoin is a different animal. It's been better than Amazon in terms of returns, but let's not kid ourselves. It's not all sunshine and rainbows in the crypto world. But hold on a sec. Something smells fishy. A bit of digging reveals that Vanguard, the second largest asset manager globally, is a top 10 owner of MicroStrategy, a company heavily invested in Bitcoin. And surprise, surprise, Vanguard also owns Bitcoin mining stocks. That's a bit strange, right? They used to let clients buy GPTC or Grayscale Bitcoin Trust, but now it's a one-way street. Sell only. It's a bit confusing, and the pieces of this puzzle don't seem to fit perfectly. Now, let's talk Coinbase. The platform might need to do some soul-searching because, believe it or not, it's now cheaper to buy a Bitcoin ETF than actual Bitcoin on Coinbase. That's a curveball. If that trend continues, Coinbase might have to rethink its fee structure to stay competitive. Talk about pressure. And hey, I know many of you aren't just here for the Bitcoin drama. You're into altcoins too. Well, Injective just dropped their biggest mainnet upgrade ever, Volan. It's all about real-world assets, institutional adoption, scalability, and Web3 finance. Tokenized fiat currency pairs, treasury bills, exclusive credit products. They're aiming big in 2024. And then, there's this artificial intelligence crypto AIT protocol making waves. Their data annotation platform is gearing up for its mainnet debut on January 15th. Get ready to dive into the point-counting process. A sneak peek reveals a revolutionary AIT data annotation platform designed to train AI models. Now let's not forget ZK-Link, unveiling their white paper. They're all about connecting all layer 2s, solving liquidity fragmentation. The founder says they're building a ZKP-based unified layer 3 across multiple layer 2s. Are you confused? Yeah, well, layer 3 is the third blockchain layer on top of Ethereum layer 2, delivering higher scalability, lower gas costs, and more application-specific customizability. Unique, right? ZK-Link Nexus is providing aggregated liquidity across multiple layer 2s, unlocking more trading opportunities. The innovation in the space is mind-blowing. As for the Bitcoin price, well, it's dancing its usual volatile dance today. Buckle up, and we'll catch you on the flip side tomorrow. Stay tuned and have a good one.